Good morning, it's Jonathan Barratt with the week ahead report, the war report, report that really covers the week ahead. Basically some of the important announcements and some of the themes that we're following. And yeah, see what we feel, what's going to happen over the next 5 days worth of trading. I guess the most important thing is Friday night's unemployment number was tagged to be a big one. It was, but a big one in the opposite direction. Expectations were quite bullish of a very strong number. It actually came in quite little. 500,000 was the key we wanted, and we came in about 47,000. So even though the actual rate dropped to 9.8%, which was quite encouraging, the market wanted more out of it, and as a result of that, we saw profit-taking or risk aversion trades going on. In addition to that, we saw some hearsay, some little specks of information concerning Hungary, and of course everyone decided that, well, where there's smoke, there's fire. All of a sudden there's another problem, Greece, Hungary. As a result of that, equity markets took another nosedive, fourth largest move this year to the downside, and as a result of that, risk aversion, US dollar trades went on, commodities came under pressure. Okay, so let's have a quick look at the numbers. Here we go. I guess US was down 3.16%, below that important 10,000 mark. S&P down 3.5%, Nasdaq down 3.6%. As you can see, that all quite negative. Also on the futures, all quite negative as well. So it quite a concern. I guess as we know, I think it's got more to do with risk aversion trades than anything else, because those numbers did show positiveness rather than any negativeness. So I'm going to have to stick with that and see how it unfolds. Okay, now let's have a quick look at some of the markets and some of the movements, and we'll just get out of that and go into here, and we'll move that there, which is good. Go to the prices window where we can see some charts. Now we'll start with the dollar index. There it is, straight up there. You can see. For those that understand, we've been following this pattern here, and as you can see, well, it worked. In terms of breaking out to the top side, that was something we looked at, and we're quite skeptical as to the movement, but let's see how that unfolds. But as we said, broke to the top side here, up she goes, and US dollar quite well bid. On the back of that also, we saw all the other currencies under pressure. Aussie 82.26, right down the lower end of its range. We don't want to see it get down to these hairy parts again, but certainly risk aversion is the way to go at the moment. Euro broke to its another major low there, 1948, and we're basically sort of reducing most of our positions on that pretty soon, and we'll see how that unfolds, but quite a fall. Having a look at the equity markets, let's have a look at the S&P, see if we can get a little bit of an idea as to where we feel this market can actually trade. A lot of people are telling me that it hasn't broken out of some of the key areas, and it still just remains. That's, I guess, when you look at the daily charts. That's it here. So this is support area. Whether or not big fall here, as we know, the last couple of days, but support, that's the area where we are concerned. Obviously, if it takes out that, if you have a look at the weekly chart, you can see that if it takes it out, then it is quite a concern. Now, just a word of bear markets. Bear markets tend to work in a way where you get excited that it's moving higher, and then all of a sudden it dies. It's sort of like the little train that could. But I would be clued up to looking at around that 11,040 area, because that to me is the key. 1,040 down here, and as you can see, that other low we had here was 1,040. So be guided by that. A break of that for the S&P can send it lower, and and a resumption of the trend lower. There we go. We just sort of play down with that. So as you can see, good support here. If it fails around here, then you can see it back into the 900s. Okay, so that's going to be quite. How will that affect our market on now? When you look at our market, 43.37. We know if we're wrong, if it does break. So let's just be careful about that. And you can see here down near these lows here, the important area here, low there, 41800, and obviously 4168. If that area goes, then we have got a concern. The super tax obviously will be the key driver at the moment as to what's happening. And If Rudd reverses his rhetoric on that or comes close to more of a compromise, then that will support the market. I'm of the view that he will do that, just purely because it just makes common sense to look at it. Okay, now that's the markets. Let's look at some. Let's look at gold. Obviously, a risk aversion trade towards gold. 12.19 at the moment. Two minds as to what it's really going to do here. I'm of the opinion that that all we're seeing is a lot of rhetoric, and I'm of the opinion that that the market really needs to see something concrete in order to see gold upwards and onwards. So let's just see how that unfolds. But that's the hourly chart for the movement, quite aggressive, particularly when we were down near around 11.98, which is my preferred position, and then all the way up here. But let's see how that unfolds. Okay, we mentioned that. We've talked about that. So let's go through the calendar to see the most important things that should be coming out. Now, this week we've got, I guess, the main stuff is unemployment in Australia. I think that's pretty key, and industrial production in China. Industrial production in China will be a huge focus because that's the next. This is basically to tell us whether or not things are looking positive or whether things are coming under pressure. There we go. You can see not a lot out there. Moving on to Wednesday, Westpac consumer confidence in Australia will be very important. Not a lot in the States. A lot of information out of Japan on Wednesday. Thursday, here we've got the employment, unemployment, full-time, very important. Consumer confidence also in Japan, which will be very important. And that's about it there. And I think on Friday, we've got all the numbers out of China, which will be widely watched, and I think that'll be the key focus. Also in the States, we've got retail sales, so that'll be something to keep an eye on. So what are we looking at the moment? I think it's very hard. I think at the moment a lot of volatility there is making it very difficult for us to pick the actual trend in a lot of them. We've scaled down a lot of the size of our positions, purely because we feel that it's probably the right thing to do given the volatility we're in, and I think that's the status quo. We're still long Aussie from good levels. We're still long crude from good levels. We're happy to hold on that. Underwater in some of the grains we've got, but I'm happy to hold there. They've only very small positions, and obviously the euro's hurting us as well, and we're looking to take some of those positions off. Now that's about it from me. That's the week ahead report. Not as positive as we like to see things, but that's the market. So have a good week, and we'll talk to you soon.